Hi guys, welcome back to Tax Q&A. Recently, a lot of salaried individuals claiming HRA have received emails from the income tax department, and this is not the kind of email you want to see. The issue is that claiming high HRA exemption usually means you are paying significant rent, which is completely fine, but you did not deduct and pay TDS on it, and this is where the problem begins. The ITD has identified such taxpayers and sent out intimations. And this happened simply because they weren't aware of the TDS rules on rent. So in today's video, we'll cover everything you need to know about TDS on rent. And for those who have received one of these emails, we'll also talk about what steps you can take next. Let's get started. Not for everyone, but if you're an individual or HUF paying rent of more than 50,000 a month, then yes, you have to deduct TDS. This is mandated under Section 194IB of the Income Tax Act. And for those who aren't familiar, TDS or tax deducted at source is essentially a way for the government to ensure taxes are collected at the time of payment. So as you're paying a substantially high rent, you deduct 2% of the rent amount as TDS and pay it to the government on behalf of your landlord. For those paying rent below 50,000 a month, TDS is not required. It's 2% now. The rate was revised in Budget 2024, bringing it down from 5% to 2%. This change came into effect from 1st October 2024. So if you're deducting TDS for financial year 24-25, the applicable rate will be 2%. TDS can be deducted once a year, either when you make the last rent payment for the financial year or when your tenancy ends, whichever comes first. For example, if your monthly rent is 70,000, your total rent for the year would be 8.4 lakh. At the rate of 2%, the TDS would amount to 16,800. Now, when it is the time to make rent payment for March, instead of paying the full 70,000, you'll deduct the TDS and pay 53,200 to your landlord. Then the 16,800 rupees needs to be deposited with the government. So by now we know that TDS needs to be deducted. But what happens next? Well, the next step is to deposit it with the government, and for that you'll have to file a form called Form 26QC. This is a TDS return that will contain details of you, your landlord and the rent that has been paid. To file it, you can simply log into the e-filing portal, go to ePay tax and click on new payment. Among multiple options, you'll see 26QC, select it, fill in the required details and make the payment. Once you have submitted Form 26QC, the landlord will see the TDS reflected in their Form 26AS. Now remember, you have got 30 days from the end of the month in which the TDS was deducted to get this done. So if you deduct it in March 2025, your deadline will be 30th April to file the form. Yes, TDS is applicable when paying rent to NRIs, and it is actually pretty common. A lot of people have properties in India and they rent it out while living abroad. In these cases, the rules are a bit different. The TDS rate is much higher, 30% plus a 4% cess. So the effective rate becomes 31.2%. Another thing to keep in mind is that as a tenant, you'll need a TAN, which is tax account number. It is mandatory for deducting TDS in case of rent payments to NRIs. Once you have that, you'll deduct and pay the TDS, and instead of filing Form 26QC, you'll file Form 27Q, which is specifically meant for all kinds of payments made to NRIs. If you don't deduct the TDS in the first place, you'll be charged 1% interest per month until you do so. And if you deduct it but forget to deposit it with the government, the interest goes up to 1.5% a month. On top of that, there is a penalty of 200 rupees per day for the late filing of Form 26QC, but this is capped at the TDS amount. See, as I already mentioned in the beginning, when you're claiming a high HRA exemption, it usually means that you are paying a significant amount of rent. And because the government now knows that you're paying a high amount of rent, they check whether you have paid TDS on it or not. And for those who didn't, they have received a communication from ITD. The gist of the email is that since no TDS was deducted, they assume that you might not have paid a high rent and you are expected to revise your HRA claim. First of all, it is not a notice. It is an email communication. However, you'll have to take action in order to avoid further scrutiny. You have two options here. Number one, if your rent was indeed above 50,000 per month and you missed deducting TDS, you can go ahead and file a Form 26QC. Along with the TDS, you'll need to pay interest and any applicable late filing fees. Once that is done, your landlord can see the TDS in their Form 26AS, and if eligible, they can claim a refund by filing a rectification for the respective year's ITR. Another option is that you file an updated return as mentioned in the email. If the rent wasn't as high and the HRA claim was overstated, you need to file an updated return. This means recalculating your taxable income without the incorrect HRA and paying the additional tax liability. Lastly, to avoid this situation in future, you should pay your TDS timely. And that's all for today. If Google search is too much work for you, Quora is full of opinions, then you should check out Tax Q&A, where you can toss questions and our tax experts give quality answers. And hey, don't forget to like and subscribe so you do not miss out on what's coming next. Catch you in the next one. Of course. कौन रह रहा है इतने सस्ते अपार्टमेंट में? Oh wow, yeah. Started off bad. चलो. Okay. TDS. जंबल द वर्ड्स खेल रही हूँ मैं. भाई मैं ऐसे घूम तो नहीं रही ना बीच में. अपना काम कर यार. मैं बैठ गई ऐसे. Put me out of my misery.